Please don't crash. Please don't crash. I don't think it's going to crash, but you never know. Does anybody care about the Skid Row situation? It's not 1989 anymore. I mean, let's be honest. Sebastian Bach is Skid Row. So if there's any situation, it involves Sebastian Bach because he is a train wreck of a emotional individual. But aren't we all? Okay. FinViz, I've got this producer price index, earnings summary. We're going to put this in. Okay. I'm going to put that in there. I wasn't going to put morning, John. Let's see. I am going to say. Okay. We're going to put that one in there. No. I mean, this was interesting. Yesterday's. I mean, if you're heavy tech, yesterday was hard. Oh, 12. I can change it. Let's see. YouTube. I think I did put 7-11. Morning, Scott. We'll go back in there. I think I can change it live. So, let's see. YouTube Studio. We'll put 7-12. Thank you, John, for keeping me honest here. Yeah, I don't think, I mean, Scott, overall, I'll address your situation kind of right up front. Just, you'll hear me kind of rant about it a little bit, but I don't think you're crazy for buying the dip because kind of like I told a lot of people yesterday who were not sure about things, one day does not create a trend. And so you're very much in a trend, an upward trend still. And you know, we can all go and look at the charts, obviously. But I think you're right in for anything outside of the next 3 months, buying the dip makes sense. Are you going to go lower in the next 3 months? You very well could. But that Q, you know, yesterday's morning candle, which was a 1.95% candle between 491 and 503. I mean, we talked about it. It hit 500 and it just rejected off. So I don't think you're crazy for buying the dip. Are you going to get it, you know, QQQ in the 480s? Maybe. Morning, Daniel. You know, but I think buying the dip, again, anything outside of, I think, the next 3 months, I think November, December, January, I think you're fine buying the dip. One day isn't the one day doesn't create a trend, but one day may define the beginning of a new trend. But voila. Where's she going? She ain't got shoes on, so I know she ain't going too far. Scans or book bags here. I say book bag. It's a backpack. We're adults. It's a backpack. By the way, when you lean into the microphone and start whispering, it's creepy as fuck. Somebody needs to tell old Joe that. I'm a Joe Biden fan. I'll put it out there. I am a Joe Biden fan. The man, I think is super kind. I think he's a good human. I think, politician, you can believe what you want, but I do think he's a good human. I feel sorry for him. I don't think that he's fit for office. I think he should step down. You can feel the same way. You can feel, bro, Uber's the only one. Uber had a good day yesterday. Holy shit. Bitcoin got everything. Bitcoin and crypto. Are you leaving? Okay, I miss you already.
See you later.
What time?
1-ish.
Oh, okay.
12.
You're back early.
Yeah, and I have nothing afterwards.
Okay, we'll hang out on the couch with the dogs.
Okay.
I just let you guys into my exciting life. We're going to hang out on the couch with the dogs. Easy. We're going to probably just sit around. It's Friday. BT, I think the entire Bitcoin watch list at this point has a cross up and gets in on the 4-hour algorithm because this is ridiculously large. GBTC, FBTC, Beth, ETHE. Interesting. No, she turns me on in the car. She listens. Honest to God, Blake, here's the thing. That's my girlfriend, just so you guys know, she's leaving the house, going to teach piano or I think she's going somewhere. I don't know. She told me where she's going. I just don't remember. But she is up. We were going over kind of the charts of our portfolios yesterday and stuff. She is up 100. Even after yesterday, I think it dipped down to 103%. 100, and that's just since December. She's up 103%. She has and I tell her I'm envious of this. She has more balls than I do, heading into a trade. She is fearless, and just takes profits. And she'd be the lead person for year to date on Savvy Trader if she just traded there. So, I mean, that's interesting. Covered income ETFs. Let's see. We're going to put that in there. JEPI. But she hates. She will yell at me because this isn't true, but she says I'm probably exaggerating. I think she tunes me out half the time when I talk about stocks. So, but I'll also tell you that she has a money manager who uses Interactive Broker, who year to date has only made her 8%. So, oh, she listens. Here's the thing, Blake. It's not like I'm giving her any advice that you guys aren't getting. It's not like, yes, she has the paid newsletter for free. She barely reads it. She reads the headlines of the daily newsletter. She doesn't read that. She listens to the podcast. So it's not, that's how she gets her stuff. And so again, I'm envious of her fearlessness in trades. But I will tell you also, she got out of Costco June. She didn't feel comfortable with it. So when I tell people, not to follow me and not to do stuff, she doesn't always follow me. She is very much, just, hey, I'm going to make my decision and I'm going to do it. I'm going to listen to him and then I'm going to make my own decision. And she's got a full-time job, so it's not, it's not 9 to 5, but she's all over the place, typically driving in different places and stuff like that. So it's not like she's got time to look at charts. She uses her phone. She likes Webull over Fidelity. I will tell you that. She loves Webull over Fidelity. I can't believe it. We always argue. I'm like, you can't have all that money in Webull. It doesn't make me feel comfortable, but she's perfectly fine with it. Again, give and take. She's got a good system. So, and by the way, just so you guys know too, she's on here sometimes chatting with everybody. Morning, Kevin. Yeah, she jumps on here and chats, and in fact, I think the day that the power went out in half my house, and it just so happened to be my office, and it was a blip in the power, and I think I have 2 power lines coming into my house because I don't know. I mean, maybe they wire the rich neighborhood differently. I don't ask questions, but I know when they were cutting down a tree next door and they were grinding the stump, they cut one power line. And I had power in half my house. And I had to, in order to finish the podcast, I had to run an extension cord, one of those orange extension cords from my kitchen into my office. I think it's 150 foot, and it was stretched. But I guess I have 2 power lines. I don't know. Come on, man. This is just low-cost ETFs. Why is this taking so long? I don't know why it's taking so long. We got to get to the watch list. That's what I want to see. If anything crossed up on the watch list, I'm going to skip this. Spider sectors, nothing in the spider sectors, I'm sure. Nothing. We'll go back to that one. Watch list is probably going to take... Oh, there we go. Okay. STRL. DraftKings. Uber, GBTC, Anon, ETH, and BITO. Those are in the watch list, even though they're crypto. Let's go to the Dow. Yeah, I mean, I do get lucky. I will tell you, a lot of this and I was on Spaces yesterday arguing with a guy who turns out to be on CNBC. He was on the Spaces that I was on. And I came on, and I'll say it again. There was no better indication of a crash on Tesla than Jim Cramer coming out and saying it was going to be one of the 8 $1 trillion companies in the future. And this comes a month after he claimed he would rather own GM than Tesla, and no explanation of why he, bashed Tesla and blah, blah, blah. And these guys were defending Cramer. Cramer's okay. Cramer knows what he's talking about. His investment club doesn't beat the S&P. It's a texting service. It's just, I've got a lot of problems where he doesn't classify himself as entertainment. He classifies himself as a stock picker, and you should follow what he does. And that's not what a stock picker should do. What you should do with a stock picker, you should absolutely make your own decisions. And he doesn't frame it like that. And that's why I'm not, number 1 rule of the podcast is don't follow a douche on the internet. And I am that douche. Number 2 rule is don't follow Jim Cramer. And it's not hating on Cramer. I think the man is incredibly smart. The amount of data that he's able to absorb is amazing to me. I can't do it. But I'm also, I don't have a team of like 10 producers who feed me phone calls and stock picks. Honest to God, when you guys send me like a social request, I copy and paste it into my notes so that I have it. I don't look at the freaking stock before. General Dynamics. We got a lot of freaking wow. LD, Abbott, McDonald's. We have, and Nike. Okay. Wow. We'll go to the 4 hour. Algorithm still doesn't have you out. Four, 5, 6, 7. I mean, it was the entire. I don't think anything specific happened with Meta. I think it was the entire. Are you talking yesterday, Varun? I think it was the entire stock market. Well, I shouldn't say that. I think it was the entire tech sector. I don't think it's anything specifically. This is you getting Meta on sale. I mean, that's my view on it. He's going to spend another $10 billion on NVIDIA chips and running AI. I mean, if you're okay with that and you want to continue buying it, just buy it. Read Snowflake's, buy Snowflake under $200. I mean, every day I get somebody asking me about Snowflake, okay? And yes, you may not tune in every day, so I'll continue to go over it. But if you're going to ask me about Snowflake at any point in time until this changes, this is it. You're going to buy Snowflake under $200, and you're going to wait for it to pop to $200. That's it. Now, do you have the here on earnings? If they just say, hey, we're not signing as many contracts, our contracts are actually shrinking, software services are going down, yes, potentially. You could go down below this 120. But in my mind, I've put, I think my average purchase price is between 150 and 160 because the middle of this is right at 159, 160. And I said, you know what? I don't care. I'll just buy it in the middle. It'll pop to 200 at some point in time. But Reed, other than that, it's an expensive stock. It is super, super expensive. So don't put your main portfolio into that. I mean, I know Shai Bular, he's got a big position in that one. I wouldn't feel comfortable with it. He is significantly younger than I am. I've got, my large position is Apple, Amazon, Google, Meta. Not Meta. Meta's not a big one. QQQ. Yes. So, okay. I'm going to go. I'll be right back. Okay. Hopefully, Breed, that gives you an idea of how I would play Snowflake. There's a couple of things in there that there's nothing in Snowflake that I think is, oh my God, you've got to get into this thing. We've got two. This is a good, we're going to go over here. This is a good video from Ross, 11,000 day trading momentum on 14 stocks. It's a little bit much for me, but Ross is a crazy man sometimes. This is a good video. I'm sorry, a good thread. This dude turned 10K into $18 million. And so it's you need to watch it to see how he did it. It's 2 years. So it's not like he, did something crazy. We'll go over the earnings. Citigroup, I was absolutely right on. Zap Electric actually continues to make, it's up 26% today. Weight loss drug, we're in a GLP-1 market. Bezos sold another 500 million. I should see if, we'll just go over. NVIDIA leads the decline. The theory of postponement for the robo-taxis. And there wasn't anything more clear. Again, Jim Cramer believes Tesla could hit $1 trillion. So you don't want to miss that rant. Biggest movers of the day, Tesla, Eric, and more. There is a new TrendSpider tool called Relative Performance, which if you have TrendSpider, this looks pretty freaking amazing. And it's an indicator that you can add to your system. I'm not going to add it to my system right now. I may play with it over the weekend, but what I like about it is you can scan on it. So for instance, what do they do? This and this is just, again, TrendSpider, how to read the indicator. And it's a blog post. I'll put it here for anybody that doesn't go to Linktree and sign up for TrendSpider if this interests you, because my link gets you, it's $50 a month. Visualizing relative performance on your charts, and they give a couple of examples down here. Netflix, look at how it goes there. Scanning for relative performance, and they provide the scanners that you can just put into your system. I wanted to see, this is Apple, how the relative performance is in there. Benchmarking, let me see, because there was one where they put in visualizing. So here's Tesla. That's, Tesla. Relative performance was low. Boom. It triggered it perfectly. Cat, it triggered the downside perfectly. So I think that's interesting. So we'll go kind of, I'll just mention it. I won't go over it, but I thought that was really, really good. Fundstrat. This is kind of where they're thinking, as we've written about many times, blah, blah, blah. They think it's going to go. This, at one point, the S&P was down. This is what I wanted to show. This chart from Seeking Alpha, the 5-day chart from Seeking Alpha, shows a clear divergence. And this is the producer price index was up. So that's what we're going to go over. So, Blake, Apple, I didn't trim Apple. Just to give you an idea with Apple, am I trimming stuff? I sold out of Tesla yesterday. My parents had 400 shares, 300 shares, something. I forget a lot. They had a lot of Tesla. They should have made that, and wow, Citigroup is just flying. They should have, if you look at Tesla, so, and I'll show you the weekly on Tesla, because it was clear several times that they should have sold Tesla. And you can see it rejected right off of that realm. So they bought somewhere in the neighborhood. I think it was August of one year. It must have been 2021. It was here at about, I'd say it was about $200 a share, equivalent price or something like that. Maybe it was like 180, 190, somewhere in that neighborhood. I don't exactly know the exact price, but the price doesn't matter. It was way back here. They should have sold up here. It came back down. They should have sold up here. It came back down. They should have sold up here. It came back down. And now, finally, they gave me they gave me the ability to sell it. I sold out of it yesterday. I saw it move from 260 to 250, and I got lucky. I said, something's going on. I think I sold out at about 252, 253. And I didn't decide to trim it. I just sold out. Other than that, I made no moves yesterday. One day does not define a trend. So am I trimming? No. And oh, by the way, my Tesla friends were like, when are you getting back in? I'm going to get back in when the 4-hour algorithm tells me to get back in. The 4-hour algorithm has not gotten you out. It will not get you out on an extreme candle like this. It will wait. It plays in the middle ground. It is a safety. It is so safe that on Tesla, it makes you 202% versus 7.5 if you just bought and held 24 months ago. So I like that it rejected right off that 260. I called it. I don't know anything. I'm not a genius. It just looked, and again, you can't tell, you can't time this. Did I sell it up here when it got over 260 at 271? No, I didn't time it. I said there's weakness, I'm just going to sell it. And yeah, Chris, it's good portfolio management to do stuff like that, Blake. But for me, I'm not a very good, I'm a great, in my mind, I'm a great, a picker to find entries. I'm not a very good portfolio management guy. And it's part of, some things that I work on a little bit. But like NVIDIA, great. I sold it at 500 and, because it was popping at 500, I sold half my lot at 500 and I wanted to get back in. I never got back in until yesterday or the day before yesterday when I got back in at 130. Morning, Kim. So Ben and Jack's lawn care. Oh, Ben and Jack. I am a lawn care nut, by the way. I've got Bermuda grass. I am not a dominator yet, but I am part of the Dominators group on Facebook, just so you know. AT&T sucks, Ben. Trade it. Don't own this. Don't own that stock. Do not own AT&T. And I will show you why you don't want to own AT&T. Even though this is a great, right here, 16, great buy because you're at 1887. Fantastic buy. But let's go to a monthly chart because I want to show you why you don't own AT&T. Okay? Look at this is 2000. So this is 24 years of AT&T. Don't own it. Trade it. And find a system that works for trading it. That's the way you own AT&T. It's a capital intensive business. Cell phones, which is their main bread and butter, and home internet, it's a race to the bottom. So, Ben, I will not give you advice on options. That's your choice. I do not do options. So if you're looking for options, unfortunately, I am probably not the right channel for you. I don't do options at all. I know people use my guidance to play options, but I will not give you guidance on options. I just will tell you that it's not a stock that you want to own. You can trade it. Trade it all you want. I'm not a fan of the actual company, even though I will tell you, I have AT&T fiber at my house. It is fantastic. The service is unbelievable. I don't have AT&T phone service. I use Visible. And if you wanted to know what I had, it's all on the link tree right here, linktr.ee. Let's make sure we got all our pricing stuff, and we've got the key components there. Okay. Yeah. No problem, Ben. I'm here. I mean, I'll answer any question that you have. I won't give you guidance on what to do. Number one rule of the podcast, don't listen to a douche on the internet. I am that douche. Number two is don't listen to Jim Cramer. So, okay, let me hit record. If I crash, I will be back. We had a crash yesterday, a little later in the day, but if I crash, I'll be right back. If you're new here, the biggest thing you can do is sign up for the newsletter. It's free. dailystockpick.substack.com. If you can't remember that, just go to Linktree. The link is down below. Any of the links that you see are right here. You'll see me use TrendSpider. This is the number one. This is the best charting platform out there. They just continue to get better. So I'll show you a couple of things in this one. The other things that I use are Seeking Alpha and Alpha Picks. Alpha Picks has a new stock pick coming out on the 15th. So I'll go over all of this stuff. But what up? Good morning. It is Friday, July 12th. July 12th. I think I wrote the 11th on some things, but it is the 12th. Is today a good day? Well, it depends on what side of the fence you were on. Were you in value yesterday? Were you in tech? We'll go over all of that stuff. But I want to brag right now. I got 5 for 5. 5 for 5. Okay. First thing was Costco. We went over it yesterday. I told you $900 was going to be the price when they raised the membership. It pulled back from $900. Hopefully you got out at $900. I did not, unfortunately. So I'm sitting there holding it. Am I going to get out of it? I'll make a decision today. Pepsi, I said it was going to be a shit show of a stock. I think Brandon bought Pepsi. He works for Pepsi. Insider trading. He bought more. He thinks it'll be fine. Delta Airlines, I said you can trade it. Boom, it pounced right off that 42 that I said yesterday, and it bounced up. I said trade it, don't own it, trade it after its earnings. Wells Fargo, I said it would bounce off of 60 on the earnings. What did it do? It bounced off 60. It's trading at about 55 today. And then I said buy Citi. Citi is the best bank that you can do, and it's up today after earnings. It's the only bank up after earnings. So I nailed it. Where can you get all this? In the Daily Stock Pick newsletter. All of this stuff, some of it's free. The Costco stuff for free. The Pepsi, the Delta, the Wells Fargo, and the Citi, that is all in the weekend newsletter. And it was all this weekend for paid members. So if you're interested and that's your type of thing, that's the type of thing that I provide in this newsletter. It's 5 trader tips. And then I go over, hey, here's the earnings list this week. Here's Pepsi. I didn't think Pepsi was going to be good. Then I said, hey, here's Delta. I just took a look at the charts and I took a look at the earnings hub stuff that was out there. And I said, Delta, trade it. Don't own it. You can trade it, but trade it after earnings. Then I said, Wells Fargo, I own this stock. I purchased it at $40. Current book value of 46. The current price is 1.3 times book value. JP Morgan is trading at almost 2. Just like Delta, it's a strong buy in the quant from Seeking Alpha, and Wall Street price target is 7.5% higher. I said my opinion of this stock is to hold 60 in order to prove it can sustain a measured move higher. That's it. It did hold 60, but after earnings, I may trim some before earnings. Friday sentiments will shape how financials will trade over the next few months. So any reason to sell these at or near 60, I'm going to do that. I've got quite a bit of in my brokerage account over 1 year, so I'll gladly pay that. Then I said Citi. This is Mike Mayo's number 1. How are you going to trade it? I went over some stuff. My thoughts on this one, you've got a 6% gain with an average win in the algorithm and a 7.86. So it might turn over a little bit. I like the stock long term, as you can see from the weekly. But it is worth the risk in going into earnings. I like this stock and plan to add to it to my portfolio. Add it between 63 and 65 before earnings. If the stock pulls back after earnings, I will most likely hold the stock and add to it. I like everything about the stock. Peg forward ratio. Let's go and let's look at Citi. Let's pull up Seeking Alpha and let's look at Citi. SeekingAlpha.com. We'll pull it up because I don't have it ready because I wasn't ready to really brag about this one. But the paid newsletter, I mean, that paid newsletter just paid for your year. I mean, that weekend just paid for your year. That's it. I mean, you're in pre-market, you're at 67. I said add between 63 and 65. Most likely, if you put $5,000 into that, you just paid for the newsletter. So think about upgrading to the paid newsletter because, again, I may be Nostradamus. Now, let's talk about producer price index. Yesterday, we got the CPI. It showed that inflation was curtailing a little bit. It was good. Everybody thought we would fly. We didn't. It just, the market, if you're invested in tech like I am, the market felt bad. Okay? But what I want to point out to you is that 7 of the 11 sectors, and again, this is in Seeking Alpha, so you can look at all of these sectors. 7 of the 11 were up, green yesterday. What was down? Tech, 2.5% down. Consumer discretionary, XLY, which includes Tesla, 1.27 down. Communication services, down 1.37. But what I also want to point out is consumer discretionary year to date is up 6.33. Down 1.27, who cares? You're up 6.33 over 1 month. Year to date, 5.71. Technology, who cares about 2.5%? It's bound to pull back at some point in time. Yes, it's drastic, and yes, it feels bad. Over 1 month, you're up 5.25%. Year to date, you're up 20.39%. So I want to put this into perspective. You can't time the market. This was simply a rotation day. And this PPI doesn't do good things about the economy. It says things are costing more. But the market seems to be holding up. If we didn't have that pull down yesterday, you would have had it today after this PPI. And I'm still not sure what the market's going to do. It's a Friday. I'm not making big moves. I'm not adding to my positions. After yesterday, we'll go over it. The biggest, NVIDIA was the one that moved everything down. I bought NVIDIA on Wednesday. So, I feel like a douche. But this chart that I put on my Twitter yesterday, 5-day chart from Seeking Alpha, shows a clear divergence from tech. The green line is IWM. That's the small and medium cap. The orange line is RSP. That's the equal weighted ETF for the S&P 500. Look at what's going down. It's SPY and it's QQQ. Everything else, and SPY, just so you know, that's market cap weighted. So you've got your big tech, Apple, Amazon, all of those, NVIDIA. They are heavily weighted in SPY. In RSP, there's just one share of all 500 stocks. That's it. SPY, it's heavily weighted. You might have 10 shares of Apple compared to 1 share of Walgreens. I mean, again, I don't think Walgreens is even included in it, but whatever is Cisco included in SPY, S&P 500. So again, you want to, this is just a rotation day. IWM was up 3.4% when the S&P at one point, the S&P was down 1%. 400 of the 500 stocks in the S&P were actually positive. So again, it's just a rotation. One day does not create a new trend. Fun strat yesterday. This is Tom Lee. As we have written many times, the lag in the CPI report has been shelter and auto insurance. Both now seem to be cooling off. This is why we expect inflation to fall like a rock, because all the other components of CPI are largely back to below pandemic levels. If that's the case, and that's where we're going, it's not like you're going to see all of these stocks crash. You might see the rest of the S&P 500 pull up. You might see IWM pull up. And how do you want to trade these? Well, you can go and look, IWC. Seeking Alpha gives you all of this stuff, okay? I think it's part of premium. You might have it for free, but it's IWC, it's IJR. You want to take a look at this chart, this page. And how do you get to there? It's just market data, and then it's key market data. So it's very simple, but that is something that you want to look at, because on days like yesterday, if you see a red in a place in your portfolio that where it's heavily weighted, that doesn't mean that it's a bad day in the market. It just means that your portfolio might take a hiccup. And if you're comfortable with your portfolio, then you'll be comfortable moving forward. The VIX is only at 13. So it's not like we've got this crazy, crazy market. And so understanding that is important. Now, that's to calm you down. Now, to add to this, TrendSpider. You guys know I use TrendSpider to manage they have a new indicator. It's called relative performance. And this one looks interesting. Okay. It just, you can add it to your setup. I will play with it probably this weekend when they come out with new indicators. I love when they come out with new indicators. This one is, you can read this blog post. I will put it in the newsletter. They indicate here, they visualize it here. This is Tesla. You wanted to get in on Tesla? This relative performance on your charts, it showed you when to get in. You wanted to get out of CAT before its huge 14% downside. It told you when to get out. So this is a great indicator to put onto your charts. I will see if it works for me. This is why I like TrendSpider. TrendSpider continues to add things like this without upping your price. If you want TrendSpider, you get my 4-hour algorithm. We'll go over more. It's in Linktree, linktr.ee/daily stock pick. And you go to the TrendSpider page. It's up top. $53 a month. $53 a month. It is fantastic. I love this service. It's the best charting platform out there. You get to backtest all of the strategies. Say you want to build your own strategy. They've got ChatGPT. So you can say, hey, build me a strategy that where the any stock crosses under the 8-day EMA and crosses up over the 8-day EMA on a weekly chart. And you can ask ChatGPT to write that in the software, and it will write it. It will backtest it for you. It is a powerful, powerful tool. So, TrendSpider, it is my favorite, absolute favorite tool. So let's go over the biggest. Oh, I should say, you know what? We'll save this. Biggest movers of the day. Tesla. Eric, which is Ericsson. Stock rose 7% despite a 7% year-over-year dip in revenue. Immutep surges 20%. The biggest one is Tesla is down again. I will tell you, I sold out of my parents' Tesla account. I've been saying this for weeks. They finally gave me the ability to trade this one. And I literally saw it move yesterday from 260. And I've posted this chart. Again, I posted everything that I look at. I post in that newsletter, whether it's free or it's paid for. Everything I do, I post in that newsletter. And I've posted this chart many times before. I said, in order to get over 260, you needed to get over this previous high. And you needed to hold. It didn't hold. Did I get out at 263? No. I was literally sitting there watching it. And it went from 265, I think, down to 255 within 30 seconds. I said something's up. I hit the sell button on the entire lot. I was going to start trimming because I said it's not holding 260. And I said, okay, we're going to start trimming this one under 260. As it gets to 260, I may start adding a little bit, playing around with it, blah, blah, blah. It's in a retirement account, so there's no tax events. So I'm able to buy, sell, buy, sell, buy, sell. At the time, I saw it move from 260 to 265, somewhere around there. By the time I pressed the sell button and I didn't mark it, I think it got out at about 252. Okay? 30 seconds later, news broke that the robotaxi event was delayed until October. Not August. It was delayed. Was there any clearer sign that you should sell at 270? Other than the day before, Jim Cramer set out and it came out and said Tesla could be a $1 trillion market cap. And people were touting this. The signal is clear. Jim Cramer, he says that a month before he said that he'd rather own GM than Tesla. I'm not saying, this is a 100% curse, but the man has an ability to just, curse any stock that you're in. I did get out. I will get back in. I did not get out of my XLY because of this. I got out of the Tesla stock in my parents' portfolio. My mother yelled at me when I did it. I called her up. I said, I sold out of your Tesla. What are you doing? You're crazy. Then at the end of the day, she called me a genius. When your mom calls you a genius, that's what you live for. So I did sell out. The theory of the postponement. This was good. Okay. The theory of the postponement, let me close these two down. This Tesla is fully aware of the $144 support. This was posted from this long investor. He posted this. Elon pumped the stock. I think that's what it was. He made a bold move, declared Tesla would announce the robotaxi on 8/8. This would, after his $56 billion pay reward judgment. Price then jumped from 144 to 265. Elon gets his reward. What a stroke of genius by Elon. He just delayed it. He knew it wasn't going to be ready in August. And by the way, I said this. It ain't going to be ready in August. August would have absolutely been a huge disappointment. Anybody that has a Tesla knows full self-driving is not where it should be. Now, what popped on this news? Uber. Do you have Uber in your portfolio? Did you grab it in the 60s? Uber and Lyft both popped on this. Uber has been a buy in the 4-hour algorithm completely. I'm going to hit stop because it seems like TrendSpider is hiccuping on Uber. It does seem to hiccup on Uber for some reason. There we go. We'll run it again. Okay. Uber's the one that popped. My algorithm makes you 95%. Sure. If you buy and hold like I do, you're up 239% in 24 months. But Uber popped on this one, and the algorithm got you back in at 73.48. Where are you trading now? 72. I would say wait until you get in the 60s to add this one. I think you've got pretty good support down here at about 62. Somewhere in that neighborhood, 60 to 62 is your support level. You are using the 200-day right now as resistance. Until you can hold this, I think you can easily buy this in the 60s. Once you hold this, I think we're going to the 80s. The problem is you've got earnings coming up on July 29th. If you want this before the earnings, just buy it. Just add it to your portfolio. It is in the Daily Stock Pick Core portfolio. I like this one. Again, it is what it is. Now, NVIDIA. NVIDIA leads the slide as the douchebag here bought NVIDIA on Wednesday, and it led the slide down. And it's not like it's coming back up. Am I upset that I bought NVIDIA on Wednesday? No. Little bit of a miss maybe. A little bit of a chase perhaps. But it's a long-term buy. And I've said this before. Anytime you can get NVIDIA in this range right here, I think you're okay. So I'll add more to it as it comes down. The MACD's in a relatively good situation. Now, what you do have to worry about is the long term. What happened yesterday was people started taking profits on NVIDIA. It came down. What you have to understand is how far this has run in a very short period of time. In January, this was selling at $15 in January 2023. $15. It wasn't the low. The low was at $12. Remember, that's $120 before the split, the 10-for-1 split. So again, I don't mind buying up here. The valuation is good, but yesterday's sell-off was just in tech. This article outlines it. Now, here's a good article. New weight loss drug. Best alternative to Eli Lilly. Seeking alpha, folks. Say AMZN. AMGN, they say. We've gone over this one before. I think it was in April or something. I brought this up. That AMZN has weight loss drug. It hasn't been approved. It will not be coming out anytime soon. But you're seeing this one. I think it was April where I brought this up that down here at 262. And you're at 325 right now. Rumors of GLP-1 will drive this stock up. Now, where are you right now? You're bouncing up against the double top here at about 330. Okay? Until you get over that, I'd say that's your resistance level. So do not add to AMZN unless you understand that the chart makes sense. That your chart, you need to understand the chart. That at 330, you don't want to buy it. Maybe at 335, after an extended kind of stay at 330, you may want to buy it. Right now, it's a hold. The valuation is a D. If they don't come out with this weight loss drug, this is going back down to a 100. So understand that this is a risk. It's the best sentiment. I like the play. Here, I'd probably wait for it to kind of come back down. Now, Zap Electric. This is one that's been going nuts, okay? Zap Electric lands financial commitment of up to $50 million. This is the person in, if you ever fly Southwest, the guy in a C group who's dressed in Gucci and didn't know that he booked a Southwest flight. He dressed up for first class. He's in the fucking C group, okay? That dude is lost. It's like the guy getting dropped off at 11:45 on a Thursday at a Walmart in the Midwest, and he's dropped off by a limo. Okay, he sees the dad with a ponytail and the wife on a scooter with 9 kids who are opening up frozen food section pizzas. Okay, that's what Zap Electric is. That's what it is. It's just a stock that's going to run. And it's a crazy, crazy stock. It is up 31%. I got a question about this one on Facebook, I believe. Believe it was, is ZAP still a buy here? ZAP is one you want to trade on a 5-minute chart. It is not one you want to trade on a longer term chart. It is one that will absolutely go nuts. Any kind of news on this one will absolutely make it go crazy. Now, I do have a 5-minute scanner here that I provide you when you sign up for TrendSpider. And I haven't looked at this in the 5-minute, but the entries are A+. So if you want an entry into this one, it's absolutely A+. The exits, I would sit there and just look at the chart. You know, the entrance here was at $9. You had this one at $8. You lost confirmation here at about $8.87, maybe $9. Maybe take your profits. You know, you got all the way up here to $9.89. That's a great profit right there. Okay, this one at $9, you never really lost confirmation. It trades very light in the after hours, so I would tread lightly. But look at how it just flew on the open. It just flew. MACD low, RSI was at 50. It's jumped up to 60. Would I be holding this one right now? I'd be selling at $12.50. Honest to God, I'd be selling at $12.50 if I bought this at 9, and I'd be waiting for it to come back down to $11, and I'd be trading it. But again, Zap Electric gets these crazy moves. It's not nuts, but it's not one that I would. And you see, Wall Street says it's a strong buy. Let's go over to Wall Street and see. It's one analyst. So be careful. Understand that when you look at these quant ratings and you have Seeking Alpha, it's never a good thing when there's just one analyst. It's not covered by Seeking Alpha. It's got, I think, a 30% short interest. Let me see. Does Seeking Alpha tell us the short interest? No. Yeah, short interest right here. 28.02. Okay? 28% short interest. So, earnings. JP Morgan beat. I won't go into too much. JP Morgan, I don't really own it. I don't like it. Wells Fargo beat. It dropped down from 60. It was a perfect play in the thing. And Citigroup, it's the only, it's back down to negative. It popped on, we can look at Citigroup here on the 5-minute. You can see you had the opportunity to trade it. If we go back here and we just look at the 5-minute, look at how it popped. Then it lost. And I think the market might be losing kind of steam. Let's see. The Qs are up. It's kind of even. But the bank's just lost its steam. I don't exactly know what happened, but you had the opportunity to trade it. If we go into the 4-hour algorithm, which is where I would say trade Citi, I said in the paid newsletter, this has a book value of $66. I think it's tangible book value of like $85, somewhere in that neighborhood. It's trading under that. The algorithm got you in at 60. Now again, I pointed this out earlier in the week. Let's see, July 8th, 63. You're at 65. I would be adding to this, and I probably will be adding to this. The catalyst was the earnings. Wasn't fantastic, but it did a nice little pop. You got all the way up to 66, it looks like, on open. It opened up at 66.57. It's been dropping ever since. I think people are taking their profits. But that's going to be expected with a stock like this. Again, it's a turnaround story. And I think 99 is where you're going. Again, this $80 is going to provide you resistance, but you're about to get a golden cross on the weekly. I don't think that you stop this run here. So again, Citi, I would add to a long-term portfolio. The Education Center, the part of the podcast here. This is a great thread. This dude, Dan Zanger, he's famously known as a swing trader who turned $10,000 into $18 million in just 2 years. If you want to be a true degenerate, go and study Dan Zanger. I will include this link in the newsletter. If you're on my Twitter, you can see it. I reposted it. I watched a couple of the videos. He identified one of the ones that I watched. His biggest single day was like $3 million. He bought puts on eBay. And he said, I just didn't think the revenues would line up. And it was too overvalued. And this was, somewhere in the 2000, during the dot-bomb stuff or during a highly volatile time. And it lost like 10, 15%. Dude kept adding puts and adding and then sold out. And within a day, he was up like $4 million. And he said that was his best day. So it's one that you want to look at. Are you going? His results are not typical, to say the least. So understand what he does. Look at it. If you're interested in that kind of thing, just to understand, in my world, options are just gambling. I don't, if you want to follow options, Ed Corona, the options oracle, I recommend him on my Substack. He is one that I think has a valuable insight into options. I don't even touch it. Now here, Ross talks about $11,000 day trading on 14 stocks. He talks about momentum chasers and how Ross figures out which stocks to buy and what to watch. Some days there's a lot of volatility in the market, and determining what stocks to watch can be tricky. He made $11,000 on 14 stocks. Again, his results are not typical. So understand that you can watch this and learn about it, but do not try and implement these things. These are guys that have years of training. So it's going to be next to impossible to actually look at that. Now, I will guide you on earnings next week. I will guide you in the paid newsletter about earnings next week. We've gotten through this week. Earnings next week, we have BlackRock, we have United Health. United Health passed $500, okay? Do you want to invest in United Health? I say United, it is in the core portfolio. United Health is at 509. This is one you want to buy under 500, and you want to sell it when it gets over 500. Until it changes that range, I don't think it's one you want to actually buy and own. I've been in and out of this one plenty. Their earnings are coming up next week, July 15th. Let's look at an earnings hub, and I'll teach you how I kind of look at these things. And I'm no genius, but when I look at this, they reported $6.91, $99 billion in revenue. That was their last earnings. This time they're expected to report $6.71 and $98 billion in revenue. Do I believe that this one will actually meet it? I don't think so. I mean, again, I'm not a big fan of this company. This company kind of screwed my parents on their health insurance. I'm not a fan of it. But, if you reduced performance, do you want to get into it? I would say if it's under 500, you're probably fine. But again, if it dips under 500 after its earnings, just buy more. It's one that consistently trades like that. Now, Bank of America, I own. It reported 83 cents, expected 81 cents. Revenue, about the same, 25.29 versus 25.98 billion. I think this one does fine. Am I holding it? Yes. I would rather see you buy this under 40 before earnings. So if today, for some reason, it goes under 40, I think you can buy it. Now, do I think that, you're going to get to 45 or 60 or something like that? I don't know. Lord knows where the price is going to go. Lord knows where banks are going to go. I've owned this one since 30. I was pounding the table. You should buy this under 30. I've owned it. Morgan Stanley we have. Interactive Brokers we have. J&J. We have Ally Bank. We have American Express. We have Netflix. Let's take a look at Netflix. This is one that I said is $700 stock. They reported $5.28. They're expected $4.42. I think they're going to blow it out of the water. If you're on the ad tier, they're making more money off of you. So I think this is probably a good bet. It pulled back to $650. I think this is a $700 stock. So I will write more about this in the newsletter. But for you for free, if you listened on a Friday, I think Netflix on this pullback is an absolute buy. Algorithm got you out. I'd feel more comfortable if you got in with the algorithm, but depends on how it trades today. Maybe next week we get a nice little insert, but it got you out with an 18% gain. An 18% gain. You bought here on May 1st. I mean, it was May. You're July, 2 months, 18% in 2 months, and you're telling me that the algorithm's not good? Again, you get the 4-hour algorithm when you sign up. But, again, earnings next week, you have American Express. I'll pick about 4 or 5 of these, maybe 3. I don't know. We'll see what we have. But I'll pick a couple of these, go over them in the paid newsletter this weekend so that members can actually benefit from this stuff. So let's look at some social requests. Aliana, I hope I said your name right, Parknev. I just joined this community. This is from Facebook today. And pumped to be here. Gary is truly the best. I am not. I am a douche on the internet. I am learning so much from listening to your podcast every morning. Would love to hear your thoughts on PDD. I know there are risks with this one, but it is so highly rated across the board. Thank you. PDD. So here's my thoughts. I don't trust China. I am a believer. If you want to look up the man on Twitter, his name is Kyle Bass. He's an investor, long-term hedge fund guy. He's one of those guys who's a little bit too patriotic for my sense, but I like him. I like his thoughts. He says don't trust China, and China's crashing. PDD, I've said it before, and I've got this yellow line here. This isn't something that comes in TrendSpider. This is just from me putting it up here, okay? And how did I put it up here? I put it up here because that is your resistance level. Look at that. I mean, if you say, back here in November 2020, you had a couple of weeks where you just sat at this level, that's capitulation. Here, it tried to get back above it for a couple of weeks. It didn't get there. And then here in December, tried to get above it, couldn't get above it. Here in April and in May and in June, tries to get above it. It can't get above it. Until you can provide me proof that this has turned into support other than resistance, I think your cap on this one is 149. Let's go over to Seeking Alpha. Let's see what Seeking Alpha says about it, because I think it's probably a strong buy in the quant. Yeah, it's a strong buy in the quant. Most of China is a strong buy in the quant. The reason is the valuation is low, the growth is high, the profitability is high. I don't trust China. If we go to Wall Street and we look, I think there's probably 10, 15, 41 analysts that cover this. Now they're all saying strong buy, 205. What makes you think that 205 is actually in this stock? That is the 2021 highs. And I think clearly in this stock, this has provided you resistance at 143. Now, again, if you want to invest long-term and you think that these guys know what they're talking about, I will tell you, I see this one clearly moving at this 150 level and not getting above it, and them still raising their price target. So, Aliana, I think you have to do more research. I don't like it, but it is ranked number 1 out of 30. For me, there's so many other good opportunities in this market that I can take care of. I just think that there's other places out there. Now, if you want to put $100 on PDD and see if it breaks through that 150 barrier and then, start adding to it after it creates that, I think you're good. Once you get above that 150 level, I think you can add to it. Again, the valuation is there, but until you get to that, I don't trust China. And it's not like I'm a China hater. I love China. I've been to China. I've been to the Great Wall. I have a great story on China if I ever kind of decide to tell it. But I have a great story about visiting the Great Wall. The people, fantastic. We were followed by the government. This was 1993, so it was years ago. Followed by the government. We were students, and you see who's following you. I mean, it was pretty obvious at that point in time. But I love the people of China. I love China. I just don't trust the administration of China, the communist administration. They pick winners and losers. So in my mind, that's not one that I want to invest in. I'd rather invest in something in America, which actually has, the market decides what's good. So Lil Pablo commented on Spotify. I have found out from Spotify, they messaged me. I said, why can't I get comments? Well, here in the U.S., I guess there's no comments allowed yet. But Lil Pablo was able to comment on Spotify. The comments are coming to Spotify. So understand the comments are coming. Lil Pablo says, and I love that name, Lil Pablo. I could say that 10 times in a row. But I love the pod. Can you look at RRGB? They seem to have changed the menu. And 2 stores near me, consistently packed with people, seems oversold and undervalued. Is this Red Robin? Is this the bottomless fries? Yeah, Red Robin. Oh, I like their burgers. In fact, I had a burger last night. I'm usually meat free, but we were in Walmart. I bought a brioche bun. Had some, and I fry up air fryer some golden potatoes. They're like French fries. Oh my God, don't get me started. It is so good. I'm gonna have it again tonight. So, just in this short look at it, it's upper left to bottom right. I will tell you the consumer in this particular category is stretched. And it's fine dining casual, and you look at like Dave & Buster's, you look at Darden, you look at others. It's not just Red Robin. And yes, they are packed, but their costs have gone up. So I would say in this one, the algorithm makes you 64%. You lose 30% if you bought and held for 24 months. So 2 years. If you bought and held, you lost. It's upper left to bottom right. Now, what does that mean? That just tells me I want to see a direction change in the stock. So when I look at the weekly, I see the 200-day is moving negative. I see the 50 days moving negative. You can't time the market. Yesterday is an exact replica. You can't time the market. The market will always surprise you. So you want to wait until you can spot a positive trend. Now, if we go over to Seeking Alpha, let's take a look at this. And by the way, I like Red Robin. Red Robin has those endless fries or something. I love it. Average price target of Wall Street, they've got 5 analysts. So it's not a lot, $15. That's 157% upside. But you can see they've consistently brought their price target down. Now, the revisions, we can see D. 0 up, 3 down, 2 up on revenues, 1 down. Now, if we go to the valuation, we can see they're not making money. That's the problem. They're not making money. And then if we go to growth, let's see how much their revenue's increasing. They're losing 1% of revenue per year. And with increasing costs and reduced revenues, that's a problem. So in my mind, my guess, and it's just a guess, they've got to probably close some restaurants. They've got to whittle their restaurants down. I bet they have underperformers. RRGB's Q1 was bleak and the high debt poses a midterm threat. So it's the debt. So what you have to understand about stocks is it's this whole business. It's not just, hey, I'm going here and the restaurant is packed. It's the whole business. And when debt kind of crawls into this space, and a lot of these restaurants were killed by COVID and stuff, that's the debt when you want to look at it. When you go to valuation and you look at this stuff, the sales, they're doing well. It's just the debt, the profitability. When you look at this, they have 13% margin. The sector median is 36%, I'm sorry. So the sector. So let's go and look at their industry and see what's good. Okay, Brinker International, which ironically is an alpha pick. I don't know if I'm supposed to say this, but it's an alpha pick. And you can see this one is a better trending stock. So it's ranked number 1 as far as restaurants go. And you can see it's got a C. Wall Street says it's a hold. We can look. 19 analysts cover this. And we can look at the history of the price target. It's now over its price target at 62.59, so 4% downside. So, but they have a much better valuation. And that's what's driving this stock up versus Red Robin down. Now, when I go and look at EAT in the 4-hour algorithm, you make 59%. Buying and holding makes you 174%. Now, EAT, when it got picked by Alpha Picks, I think it was around here at about 65, where it's trading right now. They didn't get in at 46. My algorithm got you in at 46, got you out with a nice 45% gain. Then you got to buy in here, and it got you out with a 2% loss, but it saved you from this other downside. Would I buy into this one now? I would not. I would probably wait because, again, you want to take a look at these volume levels here. I'm seeing that it broke down below this $67 volume level right there. That's a pretty big volume level. That might bring it up. But if you break this 61 price, okay, if you break that 61 price, you've got stair steps down to below 60. And the largest holdings are right there at 48. So again, you want to take a look at those volume levels here. Now, the RSI, super low at 30. The MACD, super low. I'd rather wait for confirmation. When the algorithm tells me to get in, I'll get in. You win 38% of the time. Your average win is 14%. This was a fantastic run. So, Lil Pablo, I'd be a little bit concerned about Red Robin. I think you continue to eat there, but take a look at the prices. The employees, again, what's with the producer price index includes wages and things. And that's where restaurants have been hurt is some of these people have, gotten raises and they deserve it. But the overall restaurant is making less money. And so Wall Street's going to punish that type of restaurant. Let's talk about scans. Uber. We talked about Uber being a cross up. Uber is in the core portfolio. Uber's at 72.73. The algorithm got you in yesterday at, let's say Uber. Oh, it's doing it again. It's crossing again, but you can see it. STLR. Uber doesn't like. I don't know why. Maybe it's a Lyft customer. TrendSpider's a Lyft. Okay, I'm hitting stop because it got stuck on Uber again. Now I got some editing to do. Mother effer. Okay, there is Uber and STLR. No. STRL. There we go. Okay, I'm going to hit STRL, Sterling Infrastructure, 117. 117. This is in our watch list. It was either a alpha pick or it's a a Motley Fool pick. I'm not sure which one, but STLR, DraftKings. I've traded DraftKings a number of times. When you get over 40, you sell DraftKings. DraftKings right now is trading at $37. And we talked about that 50-day. That 50 days moving positive. I think, again, if you want to listen to the algorithm, you make 189%. If you buy and hold, you make 183%. That's over 2 years. You win 42% of the time. In my mind, this is one worth taking a chance on. You're coming up on earnings. I think that the Summer Olympics, they're saying it's going to spur some betting. I think you get some positive stuff. If anybody's watching wide receiver or Hard Knocks, it's NFL stuff. NFL season's coming up. Maybe they got higher. So I like DraftKings. On got a cross up. Honeywell, a bunch of crypto names. Almost the entire crypto watch list that I have on TrendSpider got cross up. GBTC, BTCW, IBTI, IBIT, HODL, all of those ETFs. JEPI from the income, OIH, Halliburton, COP, and energy spaces leveraged ETFs. Ironically, yesterday, UVIXI got a cross up. We can talk about this one. This is a triple levered ETF on the bull of, this is the short of the VIX. The VIX is at 13. So SVIXI is the one that is the bull one. With the VIX going down, SVIXI has gone up. Okay, it's a triple levered ETF. And if you don't know the VIX, you don't know this stuff, don't get into this. But SVIXI gave us a cross up here at 61. You're at 64. That's almost a 10% win. Your average win is 10% on this one. Over 2 years, you make 66%. If you trade with the algorithm, that buy and hold makes you 159%. I would argue you do not want to buy and hold a triple levered ETF that's tied to the VIX when it's at 13. If the VIX goes up and the market goes down, this one will go up. But again, the VIX is at 13. It's not something that you want to do. But we got a bunch of these. SQQQ also had an entry in the algorithm. Now, that's obvious because TQQQ really pulled back yesterday. So SQQQ was way up, 763. Do you want to buy and hold this one? No, you want to trade it. So TQQQ, we talked about that one being a positive in the market. That one is up today. I got a question yesterday about, should I buy and hold TQQQ? I would say yesterday's TQQQ, it's still a hold for July. You've lost confirmation. So the key point is, yesterday at about 81, you lost confirmation and you traded, the high was 85. The low on this candle was 79. So once you lost confirmation, you traded below it. You can always buy this one back. Again, you can buy these things back. So once you gain confirmation, you could do it again. That's how I would trade some of these triple levered ETFs. If you want to just buy them and forget them and say, hey, Gary told me 100% win rate in July. Well, yeah, you can do that. We can go back and we can go back 14 years because this is the trade that got you into this. We can go back the week of the year. And we're going to go back to 2010, January 2010. And you can see the first 2 weeks are great. And we talked about this. Next week is not very good for TQQQ. 36% out of the last 14 years. Okay? The mean change was 0.07. So it's not a lot. But again, that week tells me maybe this next week is going to be weak. Historically and seasonally, it might be weak. Now, if we change this to the month of the year instead of weekly on TrendSpider, and again, this is all available in TrendSpider, you can see the month. If you bought this at the beginning of the month, you're up, and you very well may win. We talked about the mean change being 13.54%. So again, that's a big mover. You're up 10% on this one already. If you bought at the beginning of the month. If you bought when the algorithm told you at 67, you're up 26%. Main chain's 13%. So you may have some downside. Maybe you come down back down here. But again, next week, it's showing as weak. That's just seasonal data. So maybe you want to sell out on Friday. If next week starts to become strong, just buy back in on Monday. But take your profits on a Friday. That's the way I would play this one. But again, if you have any questions, hit me up. Remember, all of these services, we talked about the Alpha Picks. We talked about EAT being an Alpha Pick. Alpha Picks is the third link on there. Look at the portfolio performance of Alpha Picks. 122% versus 35%. You have another pick coming up on the 15th. So if you want to find out what the pick is, join Alpha Picks. Use the link tree on the link. Use the link on the link tree because it saves you $50. That third link saves you $50. Now the second link, you saw me go over the quant. You saw me go over all of the ratings. That's a super easy way to value a stock fundamentally. If you don't understand fundamentals, they give you grades. And that's what you want to look at. When you go over here and you see these valuations and you see the ratings, the quant beats the market. So that's where Seeking Alpha Premium. Remember, Alpha Picks is one subscription. Seeking Alpha Premium is another. And I save you $25 off with my link. TrendSpider, this would be my number one tool that I would tell you to get. So I like this one. It's $53 a month. What you do is you go to the link tree, you sign up through that link. And then you go to the email address right here. Send me a screenshot of your account information, including your email. The email is the key one. And so email me, and I will email you back a welcome letter that includes links to import everything into your setup. You don't get my setup. The screen setup is part of the newsletter, so you have to sign up for the newsletter to see my screen setup. But I link it to you in the welcome letter so you can see it. And it's a free 7-day trial for the newsletter. So get the setup. You can set everything up exactly like I have it on the screen. You can set up the 4-hour algorithm. You can set up all these watch lists. You can do the scanners like I do every morning. It's all there for you. So again, those are the tools that I use. Look forward to a weekend email, including some earnings play because we're heading into earnings system. I see Tesla is up 2% at 245. Everything that was down yesterday is up today. Apple's up 1.61%. I'll tell you, usually when I get off on, I'm doing this, I record live on YouTube every day. And usually when I get off, the first thing I do is look at my Fidelity account to see if I'm beating the indexes. So let's see if I'm beating the indexes. My guess is I'm probably not. Meta's still down. Meta is at $500. Buy that. I am up 1%. Okay. The NASDAQ is up 0.76. I'm up 1%. I lost, I think, 1.75 yesterday, almost 2%, but I'm up 1%. I have made tremendous gains since May 1st. So if you have any questions, hit me up. I'm free. I am open. Everything that you guys send me, I reply back to. If you've listened this long, you must love me. So again, keep on listening. I appreciate your support. Thanks. Have a great weekend, everybody. Take care. Bye. Okay. I think that went pretty well other than TrendSpider hawking up a little bit. Rocket Lab. Rocket Lab is the small cap company that Shea Boulard loves. Shy. We've got bond auction, I think, going on right now. No, it's some manufacturing news or something. Rocket Lab does, yeah. It had the cross up right here at $4.34, which would have been a great trade. Algorithm got you out here, ironically, with a 7% loss. Got you out here with 28% gain on that one. This one, he was touting this one on Spaces yesterday. I'd still like to see that 50-day on the weekly moving positive. But the first resistance is probably going to be this, Chris. $6.14. That's probably going to be your first resistance. Your second resistance will probably be here at $8.05. And you've got nobody holding up there. There's literally nobody holding between this. So you've got to build up quite a bit of stuff. Yeah. Hey, great trade. Great trade. SOFI. I said yesterday, I think it was yesterday, I saw the CEO of SOFI on CNBC yesterday, and I liked him. I really did. The business is still bad to me. And I say that it's the profitability is what kills me. They have 82% margin, gross profit margin, but their net income margin is less. Now, he said they were going to turn this around. Their growth is phenomenal. And it is, he was talking about how they're using AI. That's where I really think that he's got his eye on the ball there. And I like it. It's just, when you look at Wall Street and they say hold, I think it's a $10 stock at some point in time. The average price target is $8.75, which is a 27% upside. But that stock chart, man, that is just upper left, bottom right. And it's broken down from this. I think the range was $7 to about $9.50. That I thought was a pretty good range. It broke down. I think that's probably where you're going. Yeah, Chris is right. Just don't buy and hold. It's a tradable one. Just figure out a strategy that works. My 4-hour algorithm, it's even versus 16% if you bought and held for 2 years. So maybe the 65-minute algorithm, let's test that one on this one. 65-minute, it gets you 16% versus losing 6% over 8 months. So that's not a bad strategy. And on this 65-minute, your 50 days moving positive. Your 200 days starting to move a little bit positive. You have confirmation. It would have been better to buy here at 642. Your average win is 3%. Let's see. Are you up 3% on this one yet? Yeah, I probably would wait on SOFI. I'm not saying that it won't go back to 7. But it might be, it's Friday. It's Friday. That's a tough one to recommend on a Friday. Yeah. Scott, you said it. You said it. Goldman Sachs, yeah. I'm in the temptation of, if you are trading TQQQ, I wouldn't hold over the weekend. And I think most people would kind of agree with me. I don't know what's going to happen over the weekend. Most likely Biden's not going to back out. Right now it is 100% probably Trump's race to actually lose. But, hey, and Brandon, bought Pepsi yesterday, and Pepsi's up 1%. Nvidia's back up 1.89%. Get it while it's under 130. Meta just dipped under 500. Let's see if Meta has any news on it or anything. I don't think so. I think Meta is just spending a ton of money. That's the only problem with Meta, is they're spending a ton of money. There's no news on Meta. Chipmaker Intel on path to see $1 billion in cumulative software revenue. Is Intel up today? Yeah, it's up 2%. I would have been better buying Intel, by the way. It put in that nice little floor. What's the average Wall Street price target? 38. Yeah, Scott, I remember your comment. I read all that stuff. I do. I try and absorb that stuff into my brain a little bit. I rely on, again, my charts, Seeking Alpha, and interesting notes from people. Yeah, Robert, that's the way to do it. Because you can always buy back in. Those are ones, the psychology of trading is you don't want to fall in love with a stock like TQQQ, because if you fall in love with it and you buy and hold it, sure, over time it's been a solid play because the NASDAQ has been up so much. But if you look at TQQQ, you've had to endure quite a large downturn, a a couple of times. I mean, TQQQ's high was 91. You know, imagine you bought here in November 2021 thinking there's no way this one's going to go down. Instead of doing TQQQ, I'm going to do, instead of doing QQQ, I'm going to do TQQQ. There's a split coming up, you know, reverse split, 2 for 1. I'm going to buy it. Well, you kind of, you know, volume picked up, volume's heading down, price is going up. Okay, it's 10:08. I got to head out. 10 for 1. Yep, MicroStrategy, August 8th. That's a leveraged ETF on Bitcoin in my mind, because that fucker just takes out loans and then just buys Bitcoin. Okay, I am out of here. I will talk to you guys Monday. Okay, see you, bye.